So does the idea of reverse mortgages make you a little uneasy? Maybe you've heard some scary stories. You'll lose your home, your kids will be left with nothing, or only the desperate would ever do this. These kind of myths can make anyone fearful, skeptical, but today we are going to cut through the confusion. I'm Lorne Andrews from Dominion Lending Center's Expert Financial and OptimalFinance.ca. And in the next few minutes, we're going to debunk the biggest myths about reverse mortgages in Canada and reveal the facts. This is about helping you or your loved ones 55 plus understand the truth so you can make decisions with confidence and peace of mind. Let's dive in and set the record straight. So myth number one, you're going to lose home ownership of your home. This is the number one fear that we hear. The idea of signing away your house is terrifying, and no wonder people worry. The truth, you actually never give up ownership. With the Canadian reverse mortgage, you remain on title as the owner of your home. The bank does not take your house. They simply place a mortgage on it, just like any other home loan. You keep full control, meaning you decide when you want to sell. In fact, the lender can never force you to sell or move as long as you uphold your end. Things like paying your property taxes and your insurance. You can live in the home for as long as you choose. And this is a lifetime product designed to help you stay independent in the home that you love. So a reverse mortgage doesn't mean saying goodbye to your home. It means staying in your home on your terms with financial flexibility. Myth number two, your kids won't inherit anything and the bank takes it all. I often hear, if I take a reverse mortgage, there'll be nothing left for my kids. It's a heartfelt concern. You've worked hard to build your equity and hope to leave a legacy, but let's calmly clarify this. Canadian reverse mortgages are designed to protect your equity. First, you can never owe more than the market value of your home, guaranteed. This is something called a no negative equity guarantee, and it means that neither you nor your estate can be on the hook for anything beyond what your house value is. In fact, over 99% of homeowners with a reverse mortgage have equity remaining when the loan is repaid. On average, they keep well over 50% of the home's value even after paying a reverse mortgage. How is that possible? One reason is that you're only allowed to borrow up to 55% of the home's value, and most people actually take much less than that. That built-in cushion helps ensure that there's equity left over as your home value appreciates. Moreover, your heirs can still inherit the house itself if they wish. When you pass away, your children have the option to pay off the reverse mortgage and keep the house. If they choose to sell instead, the remaining equity or proceeds can go towards your estate. The bottom line is a reverse mortgage done right doesn't eat up your kids' inheritance. It's structured so that you can still access what you need and typically leave plenty behind for your loved ones. Myth number three, reverse mortgages are only for the desperate. It's a last resort only thing. So there's a stigma out there that only cash-strapped people would ever get a reverse mortgage. You might even feel that you'd never do that unless I had no other choice. But that idea is actually outdated. Today, many financial professionals actually recommend reverse mortgages as part of a smart retirement plan. Far from being a sign of desperation, it's become a mainstream financial tool for Canadians in their late 50s, 60s, and 70s and beyond. In fact, tens of thousands of Canadian homeowners are actually using the reverse mortgage as part of their financial strategy, not as a last resort, but as a way to enhance the retirement lifestyle. Why? Because a reverse mortgage can free up tax-free cash from your home, equity to improve your quality of life, and retirees can use reverse mortgage funds for all kinds of sensible reasons to pay off existing debts, cover home renovations or medical expenses, or help their adult children or grandkids, or simply boost their monthly income so they can enjoy retirement more. And remember, this money is tax-free. It doesn't affect any type of government benefits like old age security, for example, meaning you keep your pensions and your supplements intact. In short, reverse mortgages have evolved from a needs-based product into a widely accepted retirement planning option. It's not about being desperate. It's about empowering yourself to stay in your home and live the retirement that you want with greater financial flexibility and peace of mind. Myth number 4, reverse mortgages are too expensive. It's true that cost is an important factor of any financial decision. Maybe you've heard reverse mortgages have a sky-high interest rate or fees. So let's talk about that openly. Yes, the interest rates on a reverse mortgage are a little higher than traditional mortgage rates, but not by an extreme amount. And as of now, rates often only modestly are above home loan rates. For example, a reverse mortgage might be something like prime plus 1 or 2% depending on the lender. But why is the rate slightly higher? Remember, you're not required to make any monthly payments with a reverse mortgage, which is a huge benefit. No bills to pay each month. That convenience is part of what you're paying for. And importantly, you're not paying out of pocket every month for the interest. Is simply adding to the loan balance. Many retirees find this trade-off well worth it just for the breathing room, and it gives them their budget. Now, what about the upfront costs? So arranging a reverse mortgage isn't as costly as people actually think. The main one-time expense is similar to any other mortgage. You're going to need a home appraisal, okay, and independent legal advice to look out for you, okay? Beyond that, there's usually just a one-time setup fee for administration that can often be rolled into the actual loan. In most cases, the only out-of-pocket item is the appraisal. So think about the alternative: selling your home, moving, so-called downsizing, whatever it is, comes with realtor commissions, lawyer fees, moving costs, and easily tens of thousands of dollars. By comparison, it's actually far more affordable option to access your equity. So while reverse mortgages aren't free, they're also not the money pit that some imagine. Costs are transparent, they are stable, and because you stay in your home, you might actually save money versus some of the other options. It's all about weighing out the true cost and benefits. And for many Canadians 55 years and older, the scales tip in the favor of a reverse mortgage as a sensible investment in their retirement. So wrapping up, we've just unmasked the big myths about reverse mortgages in Canada. And we've learned that reality is much more reassuring than the rumors. You keep ownership of your home. You can protect your family's inheritance. You can gain financial flexibility, safety, and responsibly without selling the place that you love. All in all, a reverse mortgage is simply a tool. And when understood properly, it can be a life-changing tool for the better. Now, you might still have questions about this and how it would work for you and your situation, and that's completely okay. Making an informed decision is so important. So if you're wondering whether a reverse mortgage could be the right thing for your particular situation, then let's talk. I invite you to book a free confidential consultation. There's no pressure, just clear answers, and we'll walk through your questions and find out what's best for you and your family together. We've heard the myths. Now let's get the facts personalized to you. Reach out anytime. I'm here to help with no obligations and no strings attached. Thanks for joining me to uncover the truth about reverse mortgages. Remember, the more you know, the better choices you can make. Take care, and I hope to chat with you soon.